So, most of you watching already know about my 6 step investing framework when I'm evaluating stocks. I wrote a whole book about it. Thousands of you have already read it. But when I'm evaluating a stock that I want to buy and hold forever, I change the ratings of my framework slightly to adjust for the longer investing time period. One of the main ways I do that is I decrease the importance I place on valuation when I'm evaluating the stock for a very long holding period. I overemphasize the customer value proposition and unit economics, the two other steps in my 6 step framework, because I feel if a company can offer a great customer value proposition in a way that sustains the business longer term, meaning that it generates a sufficient profit margin to keep the business alive for the very long term. I feel that's more important to long term investing success than valuation could be when we're thinking about, long-term time horizons. And when I'm saying forever, I'm thinking about 40, 50, 60-year investing time horizons. So based on that slight change in my view on the framework, there's actually one company in these 4 stocks that I'm going to highlight that makes the list that otherwise wouldn't make the list of top stocks to buy. I wouldn't make a video recommending that stock, and I'll share with you which stock that is specifically. So without further ado, I'm going to share with you 4 stocks that I feel you can buy today and hold forever, and that will increase your long-term wealth.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
The first of those stocks is Amazon. Now, Amazon also happens to be a fairly valued stock or slightly undervalued stock, depending on how specific you want to be. But Amazon ranks here on 4 of the stocks that I feel you can buy today and hold forever for more than just the valuation. In fact, the valuation is only a small part of why I would recommend Amazon right now. The bigger part of why I would recommend Amazon is because of the excellent customer value proposition. You can buy millions of items on Amazon's website that can be delivered to your doorstep in as little as a few hours in some cases. And if you're a Prime member, on average, you'll get your items in less than 2 days. And the prices are comparable to in-store prices or cheaper depending on which company you compare their prices to. If you're shopping at Costco, you might find better prices at Costco instead of Amazon. But if you're comparing Amazon to Target, you're going to get better prices at Amazon to be sure. And of course, the convenience factor is huge because they'll deliver these items to your doorstep. That saves you time going out shopping for these things. It saves you cost of transportation, and it adds significant convenience having these items delivered to your doorstep. Those are the primary reasons why I rate Amazon as one of those stocks you can buy now and hold forever. And of course, Amazon has its web services segment, which serves enterprise clients. That's an industry leader in the cloud services segment, and that segment generates stronger than average profit margins, all of which points to a company that you can hold for a very long time period. The next stock I'm going to highlight that you can buy now and hold forever is Costco. Costco is not an undervalued stock. In fact, I would say it's slightly overvalued at the current market price of $934. My fair value for this stock is $750. Still, I think if you buy Costco stock at $933 today and you hold it for 20, 30, 40, 50 years, the price is likely to be significantly higher in those time horizons, in those time periods. Even though you might be slightly overpaying for the stock today, given enough time, I'm confident that this company will grow into delivering solid returns for investors. Now, since valuation is not the selling point for Costco, then what's the selling point? Again, it's the customer value proposition. Costco offers its customers great values across the board, and it generates very, very low profit margins. And that's a selling point. Its operating profit margins are usually less than 4%. In the previous decade, they've been at 4% or below. And that's a great customer value because customers feel confident when they go to Costco, when they're buying an item, they're going to get the lowest price available or close to the lowest price available. Because Costco's strategy of marking up their items by at most 14% means they're not trying to generate higher profit margins when they create a product or when they buy a product at a lower price. Instead of taking the higher profit margin, they pass along that price of improvement to customers. And Costco has an excellent strategy of not opening too many new locations, so each location generates healthy profit margins as well. Costco is arguably the best in class retailer, brick and mortar at least. The company offers best in class service, and when you offer that kind of value, it's very difficult for any competitor to take away your market share. It would be very difficult for anyone to try and replicate what Costco does, and it doesn't attract very many competitors because, as I mentioned, their operating profit margin is less than 4%. So entrepreneurs are not waking up thinking to themselves, man, I want to go after Costco's business because it's such a lucrative business. I can't think of any entrepreneur that would think that, right? Whereas one of the companies I'm going to highlight a little bit later has operating profit margins over 60%, which is an attractive target for innovators and disruptors to try and go in and take market share. And you see a lot of activity in that space, whereas you don't see a lot of activity, new businesses coming in trying to take Costco's market away from them. So this is a company I feel confident you can buy today, hold it for 20, 30, 40, 50 years, and even longer. And I can be relatively confident that the price will be higher at those time periods than where it is today. And as I foreshadowed earlier, Visa is that company I was talking about. Visa generates operating profit margins over 60%. It's the highest profit margin business out of all of the 200 or 300 businesses that I'm following. Maybe Nvidia comes close, but Nvidia has only done it for a short period of time, whereas Visa's operating margins have remained leaderboard levels for over a decade. So I give Visa more credit for its operating profitability than I do with Nvidia because Visa has done it for a longer time. Visa stock has the benefit of also being undervalued. The intrinsic value I calculated is $418. The current market price is $355. Again, Visa is a company that I feel confident that 20, 30, 40, 50 years from now, the market price will be higher than where it is today. Innovators are trying to come in and disrupt the category, and maybe they will. One of the categories that's coming in that could threaten Visa's market is stablecoins and cryptocurrencies and blockchain. If transactions shift to being processed in that fashion, and Visa is no longer taking the 3% fee on nearly every transaction that happens in the world, then of course that could disrupt its business. But the cool thing about owning Visa in your portfolio, which I do, I own Visa in my portfolio with several other stocks, is if there should be a better payment processing model that comes out that lowers the costs for merchants. And so instead of merchants having to pay 3% for processing transactions, they can do it at 1%, then the rest of the stocks in your portfolio will benefit. If you own these four that I'm highlighting here, right, especially Amazon and Costco, a lot of their transactions, they have to pay a merchant fee for processing those transactions to companies like Visa, MasterCard, etc. So if they no longer have to pay those fees, then their profitability goes higher and their stock prices likely will move higher. So if Visa does get taken down by that disruptive force, then the rest of the companies in your portfolio should experience a benefit. So at these current market prices, Visa offers nice diversification benefits to your portfolio, not just with the payment processing, but also inflation. I mentioned Visa takes a percentage of every transaction. So if price levels increase, the transaction value on Visa's platforms increase, and so the percentage revenue increases, and so you benefit as a result of higher prices. So it mitigates to some degree the negative impacts of inflation on your portfolio and your personal finances. And last but not least, PepsiCo is a company I think you can buy now and hold forever. This stock also happens to be undervalued with an intrinsic value I calculated at $167 a share. Current market price is $141. Pepsi offers a great customer value proposition, gives you tasty beverages at relatively low prices, and is able to do that while still maintaining and generating good and strong profit margins. This is not an easy business to operate. The distribution challenges alone, think about distributing all of these beverages to all of the locations that ordered these beverages. Think about the logistical challenge that Pepsi has to manage there, and working with its brokers and providers and distributors and resellers and wholesalers and restaurants and theme parks and concert venues, et cetera, right? It's a difficult, capital intensive business, very difficult to replicate. And I suspect PepsiCo, Coca-Cola, Dr. Pepper, they'll remain dominating these categories, while newer upstarts will find it difficult to come in and take a meaningful market share in a way that meaningfully hurts PepsiCo stock investors. So these are four stocks here that I've calculated their intrinsic values. Only Costco is slightly overvalued. The rest of them I find as being reasonably valued. In fact, when I go to fiscal.ai, which is my preferred data source, and I look at their forward price to earnings ratio, I come to a similar conclusion. Costco trading at a forward PE of 48 looks a little bit stretched in the valuation, but otherwise the other companies look either fairly valued or relatively cheap. Amazon at 37 is reasonable. Visa at 29 is reasonable. Pepsi at 17 looks relatively undervalued. And so these are four companies that I think you can buy now and hold for decades, if not forever.
Hey everyone, I'm excited to announce that my book, Make Money Buying and Selling Stocks, a 6-step framework for evaluating publicly traded companies, is finally available for sale. Unlock the power of intelligent investing with my 6-step investing framework. It's a proven system designed by a university professor and a chartered financial analyst. Frustrated by the lack of frameworks that met my needs and high standards, I developed this comprehensive guide to help investors at all levels make confident and informed decisions. In this book, you learn how to assess opportunities, manage risk, and build a portfolio that works for you. No investor should dive into the market without a solid strategy, and this step by step framework provides you the roadmap you need. Whether you're just starting out or looking to refine your approach, this guide will empower you to take control of your financial future. I've added the link in the description below.